Hello there, everybody. Keller Williams. Hope you're doing great. Whether you're watching today live or you are going to be watching this later on one of our channels, we are thrilled to have you with us for our town hall. We've got a great day or great hour jam-packed with tons of information for you. And what I want you to know is when we put the materials together for these meetings, we make sure that they're very relative to the market of the moment. Like, what are you dealing with now? What are the biggest challenges you're having in your business now? What is something that's going to help boost your business to the next level now? So that's one piece of the puzzle. And then the other piece of the puzzle is it's June, like kind of almost July, right? So with it being almost July, we're in a scenario where, and I don't know if they can see me right now, by the way. I think they might just be able to see just the screen. So just letting you know that whoever's running the screen. There we go. Yay. Hello. Okay.
Yeah, they can always see you on the corner, Howard. I wasn't sure how quickly you were going to go to broker up.
Want to make sure. I also wanted you to know that with it being halfway through the year, it's one of those things where a lot of you are adjusting your goals for the year. You're adjusting, making sure your taxes are where they need to be for the year. You're making your quarterly payments like you all should be for the year, all that different type of stuff. So when I put this meeting together for today, being June of 2021, we took everything that I just spoke about for the last few minutes into consideration to make sure we're on the same page with that part of the puzzle, because I just wanted to make sure that it was relative to your time. When we take you off the street for 45, 50 minutes like this, we want to make sure that from every standpoint, it's going to be useful time for you and a time when you're going to be able to get the maximum value for being with us. So welcome. We're glad to have you here, and let's move forward. So a couple little minimal updates of things, because we're going to have more specific stuff later, just so that you're aware. I know you're tired of hearing this piece. However, remember that when you're in scenarios where you're dealing with leasebacks with clients, meaning the seller's going to stay back in a property, and you can open the screen back up again, Tamara. When the seller's going to stay in a property longer and they're going to lease back, I know we're not ignorant of the fact that you're probably getting some pushback from the seller and or buyer regarding the attorney written lease. If you are, it's not a problem. All we ask is that you get the disclaimer signed and the hold harmless sign so that they know and we know that the conversation was had, and then we're done. Because remember, seller stays in home. There's not an attorney written lease on the property, just an FAR lease. Seller climbs the ladder to change a light bulb, breaks a leg or breaks their back for that matter, sues, they're coming after you and me more than they are the seller. And if we don't have anything in the file that shows that we had that discussion, that there could be a problem. Because the problem is FAR leases don't have the same insurance connection, insurance referendum to what happens if there's a problem and who's responsible for it. An attorney written lease does, and that's why Florida Real Estate Commission says it should be an attorney written lease that's attached to a contract. So please understand, it's not like we want to make this harder for the agent. It's not the case ever. We want to make it as easy as possible for you. So know that that's the case. The other thing is because the market is so hot right now and so competitive right now, our competitors, the MLS, everything is watching every little move we make. So like things like, somebody will be like, I just put the listing up in Publix on a flyer. I don't know why that's an issue. And all of a sudden we get something like clear cooperation not being filed, agent being immediately fined $500, that kind of thing. That's because everyone's watching every move so close. The hotter the market, the more we're watched. It's just what it is. So understand, a lot of times we're just making you aware of that. James, yes, we recommend Rick Alford if you do need an attorney for the attorney written lease. We get you that information. A lot of attorneys do it. He already has a template in place that they're able to put it together and do it fairly simple, and it's a few $100s. That few $100s can save few thousands of dollars later down the road. So yeah, you can use them or any other real estate attorney you'd like. Okay. Alrighty, so that's my broker update for right this moment. I'm sure Tanya will have some more things later down the road when we get to that piece. So I'm going to introduce to you Sean Miller. Sean's the man. He's our lead Van Dyke rainmaker, if you will, for his team over in the Northwest Tampa Market Center. The reason I asked him to spend a little bit of time with us today is this. I don't know if you understand. No, you do understand the fact that it's so much harder to get an offer through right now, especially when there's a mortgage involved. A lot of times, and you might want to bring Sean into spotlight if you don't mind. A lot of times, uh, a lot of our buyers feel like they're at a disadvantage when they're not in a cash scenario. And there are things that can be done, there are things that can happen to make an offer stand strong, even when a mortgage is involved. So Van Dyke has been a tremendous, tremendous partner with us ever since I've been with Keller Williams, and before that, in all of our market centers. Sean happens to be the Tampa one, but we have them in all of them. And I wanted you, Sean, to spend a little bit of time with us talking to the agents regarding if indeed they're dealing with a mortgage scenario, which they still are at least 50% of the time. What are some things that they can be doing to make that offer stand strong, especially when they're competing against cash and different types of situations?
Sure. Yeah. So our weekly marketing piece that went out this week, it was how to get your contract accepted, tips on making your offer stronger. First and foremost, you're making sure the buyer's pre-approved and they have all their income documents into the lender. And making sure that you're communicating with the lender. I have to continually keep reminding the buyer's agents, not necessarily Keller Williams agents, but buyer's agents to get me the contact information for the listing agent when they're putting the offers in. So I can call the listing agent and I can say, hey, listen, the buyer's super solid, credit scores are great. They don't have a house to sell. I already got all their income documents. I reviewed everything. It's ready to go. And so many times when I'm making those calls, I'm the only loan originator that's calling when they're getting 15, 20 offers.
Yeah, and a lot of times what's happened, in fact, my cousin is purchasing over in on the other coast, and he has like a portfolio, like where he does his banking, and they've got a portfolio lender, and they wrote this letter, but the bank's in California, and the sellers are like, I don't know who this is, and I don't know what it is. So to his point, like they're more than happy to call the listing agent and talk about the validity of the offer that you're presenting. And that phone call could make the difference of it getting through.
Yeah. And a lot of times, like, when after they do accept the offer, I'll call them to thank them. He's like, listen, one of the main things was, you're the only lender that actually called me. So we can make the pre-approval letters look stronger too. We can put in there, as opposed to the just generic pre-approval letter, buyers already gotten us their tax returns, their W-2s, their pay stubs. Some listing agents are requiring them to put that on there, but we can cater it to however you need us to cater it. Regarding like the leasebacks I had put into the chat, you want to make sure that the homeowner's insurance policy is going to be acceptable for them to do those leasebacks, and make sure like that the buyer's loan type, that they're going to be okay with allowing the seller, being the previous owner, to do the lease back for a certain period of time. Most loan types, if it's a primary residence purchase, will allow them to be in the home within 60 days. So you just wouldn't want it to be over 60 days.
Right.
And really just doing everything you can to avoid doing the contingencies on these contracts. So if a buyer has the ability to do 5% down, and they currently own their home, they can do a conventional loan with 5% down. Let's say up to a $500,000 purchase price, $550,000 purchase price. If they're looking 500,000 and up, we can do first and second combo loans with as little as 5% down as well too. So you fast forward, they sell their house after they close on the house they're buying. They can use the proceeds then, if they did a first and second combo loan, to pay off the second mortgage, and then they're left with a much more manageable first mortgage. If they're doing a 5% down loan and they're like, well, I'm going to have mortgage insurance then. When doing one loan, they would. If they were doing a first and second combo loan, they would not have mortgage insurance because you could avoid that. But if they're doing one loan, they're doing 5% down. With us, after they make 6 mortgage payments, they can do a one-time principal reduction payment, and we can recalculate the principal and interest portion of the loan and also get rid of the mortgage insurance at the same time. They have to make 6 payments first. They have to contact the servicing department and let them know they want to do the principal reduction payment, and they want a recast to be done.
And and that means they're not having to refinance to do that. It's still
correct.
They don't have all those costs, right?
Yeah, there's a $300 charge if we're servicing the loan to do that, and any conventional lender, like if we aren't servicing it and we transfer it to another servicer, other servicers will do that on conventional Fannie Mae, Freddie Mac loans only. Cannot do that if the buyer's doing FHA or VA or USDA financing.
So Sean, let me ask you a question. We have a lot of scenarios where buyers are buying homes where they own a home that they're selling. Obviously, it's not a huge issue in the market we're in because typically the house they own is going to be sold within 72 hours. However, at the moment, they've got they still own that property, yet we're dealing with contingency factors. What is something that can be done to make that easier for the agent to get that offer through?
Yeah, so if they qualify with both payments, obviously that's a moot point. If they don't qualify with both payments, we can get a lease agreement for the property they're going to be vacating, and they get that lease agreement signed by, Jane Doe. It's for 12 months, and we can use 75% of that lease agreement. Let's say they're renting it out for $2,000. We can use 75% of that to offset the mortgage payment. And that, so we'd be able to use $1,500. Now, fast forward, let's just say the tenant doesn't work out. Tenant doesn't work out. It's 2 months later. We're totally fine with them listing that house and selling that house. We're not, checking to see if that lease came to fruition after the fact. So we need an executed lease agreement, 12 months, and then we can use that to offset the house payment. And we're doing that a bunch,
They are. I knew you were. And that's why I wanted you to bring it up, because agents have used it at a really effective level to get their offers through. Because remember, you put a letter V, which is sale of buyer's home, with the contract. Sometimes your offer is just getting thrown in a side pile and you're not even being looked at by seller. So I wanted them to hear that piece.
Yeah, and you just, find a lender that you can work with as a team, because buyers are going to be, well, like, and I got a buyer looking in West Chase at $600,000. Well, I don't want to have mortgage insurance. Okay, I understand. We're only going to have it for 6 payments. You're going to sell your house, and then you can do that principal reduction payment. I'll be here after the closing. I can help you out with doing that. So just finding somebody that's really going to work together, as a team. I had a friend looking out on Madeira Beach, and he put in a lowball offer and he didn't get a counter offer. And, he was upset with the agent that he didn't get a counter offer. I was like, well, in this market, you got to go in with your best foot forward. So like, you use us as the lender to talk with the buyers to help them. We'll try to help guide them along and make your job easier.
Beautiful, beautiful. So if you guys have questions, please do not hesitate, Northwest Tampa, to contact Sean. Bel Air and or Cocoa Beach to contact Justin Kelly, because Justin's been covering for us at Cocoa Beach as well. Brian Forster's team over in Clearwater. Van Dyke's been steadfast for us in a lot of ways, and it's been very, very consistent helping our agents. So Sean, I'm sure everybody will help everybody. It's not like you're going to get turned away. So
exactly. And so we can get our condition, like when you're doing your loan commitments. So I've had a lot of agents that are doing the loan commitment within 15 days, and then have an appraisal contingency on it for 20 days. The appraisals, generally they take a week to get back, but now they're, sometimes 10, 14 days, just depending on the area. So, we can get the conditional loan approval within a couple of weeks. And then if you can get an appraisal contingency signed, try to put that out 20 days. So that has helped out, or if they're not doing an appraisal contingency, see if maybe you could put the conditional approval, the loan commitment out. If the seller will sign off on it, the default on the contract where it shows 30 days or 5 days prior to closing, if they'll do that.
Got it. Awesome. Okay. Well, great. Well, Sean, this has been really helpful.
Thanks.
The thing I wanted to make sure you agents understood is don't feel like you're in a situation where you're dead in the water when you have a mortgage involved. We can make it very, very competitive for the buyer.
And last thing, try to keep the buyers positive. Like, we have buyers that are giving up because they got FHA financing. Well, listen, we're getting contracts approved and the loans approved, with FHA buyers. It's not as easy. But, again, try to use us as the lender to try to keep these buyers positive and also realistic,
Right. And Jenny asked about getting that graphic that we had on there, and Janine that Sean gave us. We can get that to the agent services and get those to the market centers. So you've got that.
Yeah, I will forward them what I got from Sean.
Yeah, so you'll have that. You've got all the guidelines and everything. And look, whether it's Sean, Justin, or Brian, or it's a member of their team, Annie or Brittany or Michael or whoever you're talking to, they're all equipped the same way, so they're more than willing to help. Sean, thank you so much. You're awesome, like always. So I appreciate it. All righty, moving forward. I believe that we have next is Andrew, correct, regarding a tech tip of what we've got going on. And before he gets into the tech tip, just so you know, a lot of you are still very, very connected with .loop. and DocuSign. Dotloop is not going anywhere. We're keeping it with us. So if your Dotloop is your comfort level, whether you've always been on Dotloop and you stay on it, or you just came to Keller Williams for another company using Dotloop and you're at a comfort level with it, you're fine. However, we continue to train on DocuSign because it is the primary element of command, and we want to make sure that if you do want to make that transition, that you have a comfort level with it. So Andrew, I'll go ahead and turn it over to you, buddy.
How's it going, everybody? Sorry, let me spotlight myself here. It wasn't letting me do it a moment ago. There we go. So what I'm going to do, I'm going to tell you a quick tip about DocuSign. One thing that you may find extremely beneficial is the ability to email documents directly into your DocuSign room, and even email an entire email thread as a PDF into DocuSign automatically for you. So I'm going to go ahead and share my screen and show you this quick tip here. Bear with me just a moment. So as you can see, we are inside of DocuSign. Now, you may not realize this, but your DocuSign account has an email address associated with it, and that's how you can email documents directly into it. So in order to find out what your DocuSign email address is, or to change your DocuSign email address, all you need to do is hit your initials or your portrait in the upper right-hand corner. And then if you go to Preferences here, from there, you're able to go to Inbox Details here on the left. And this is where you can change your inbound email. So if you wanted to change it from your first name and then whatever numbers are afterward, which is the default, to your first name dot last name at mail.docusign.net, you can change that here. You can also get a fax number and have documents faxed directly into your room. I know not many people are probably going to use that, but that option is there as well. So what we'll do in order to email documents directly into our room, if I just go back here real quick. Now, in order to email directly to the room, what we're going to want to do is we're going to send an email using that email address as who we're sending it to. And we're going to copy this ID number along with that hashtag beforehand. So if you have a document that you want to send to your DocuSign room, you could forward an email from another agent that includes the document, forward that to your DocuSign email address, use this ID number as the subject line, in any attachment within that email, any picture, any PDF is going to come directly into your DocuSign room here. Now, if you wanted to move an entire email thread to it, if you forward that email thread that you have with your clients or with the other agent, if you forward that email thread the same way using that hashtag ID number, and then if you do hashtag PDF, it's going to take that entire email thread chain and it's going to push it directly into DocuSign as a PDF file. So if you wanted to keep those records or convert documents quickly and easily directly to PDF, you can just forward it to your DocuSign email address. It's also extremely helpful if somebody sends you a document on go. You can just take that email from your phone, forward it directly to your DocuSign room, and that document will be waiting there for you to pick up and work with. So that's the DocuSign tip for the day. We're also doing our DocuSign class every Wednesday at 1 o'clock. So feel free to join in and get some more tips, and we'll walk through how to do a transaction with you in there.
Well, and also don't forget that Andrew's a resource for you guys, not just with the classes that we have in the market centers. He's also a resource for you directly when you command, in implementation of command, smart plans, apps, our app, the KW app, connection with clients, designs, all those things. So keep in mind that he's a resource for you more than just what you're seeing here on the screen. So I appreciate it, Andrew. Thanks, buddy. Okay.
Yeah, no problem. I also put into the chat a little flyer. We can download all of our apps and where to find more information. And yeah, as always, come to me directly. Certainly happy to help out.
Awesome. Thank you, Andrew. So we're going to move over quickly to transaction protection. We just got a few minutes for that. Tanya just had a couple of quick updates for you regarding this and our friendly, wonderful transaction protection program to keep you from getting sued and not having to lose your house over a lawsuit. So I'll turn it over to Tanya.
Hi there. I just wanted to just quickly remind you that you do have some other resources for the net sheets. I think the net sheets are freaking people out right now. And I wanted to remind you that you can reach out into to the lender. If you have a buyer who's using a lender, you can reach out to the lender to see if you can get a loan estimate. Sometimes the lenders won't give it to you directly, but you can get your buyer involved to get that. You can use that as a net sheet because you definitely want to make sure that they understand the estimated costs. The other option for you is to reach out directly to the title company and see if they can give you a preliminary closing statement. You can use that on both sides. If you have a seller, you can just give them the closing date or estimated closing date. They'll run a preliminary closing statement for you. And if you have a cash buyer, they'll do the same thing. Also, a lot of title companies, I know Star Title has an amazing app out there where you can just enter the information. It'll print out a PDF for you, and you can use that to talk to your buyers and sellers about their net estimated costs. I just want you to know that there are other options. Don't be freaked out just by trying to fill out our net sheet. The other thing I wanted to remind you is we're seeing a lot of, we're having to return a lot of files for things that are just, if you just slow down just a little bit, take your time and look at your files before you submit them. We're missing initials, signatures, missing documents, reference your checklist. Make sure you have everything before you submit it because it's time consuming for you to have to come back and see if anything's been returned to you and then have to resubmit it. We don't want that.
Let me interject something on that if I may. Keep in mind that with the market being so tight right now, we've had situations where sellers get another offer that's maybe 10, 20, $30,000 higher. They take it to an attorney. The attorney realizes the agent forgot to get a part signed. They go, shh, don't say anything. This agent screwed up. And we'll just wait, and then we'll pull it back out and then show that it's not a valid contract, and you can throw them out. And it happens. So again, like Tanya said, be careful with this. It's not just to protect you. It's not just to make sure you get a DA, to make sure that the client gets the house too. So just throwing that out there as well. Sorry, didn't mean to interrupt, but just wanted
Yeah,
to.
no, that's perfect. That actually works on the opposite side too. We have a lot of agents out there that are running wild, and so we want to make sure we're protecting our side too, our sellers in the transaction. Submit your files early. Let us be your second and third set of eyes. If you're using a TC, we're your third set, they're your second set. But always make sure that you submit your files early. We're seeing a lot of either both sides of the transaction or non-representation on the other side. There is a piece on each checklist, a buyer control checklist and a listing control checklist that tells you what you need when you do not represent the buyer, or the buyer is coming to you or the seller is coming to you and they're not represented. There's just a few documents you need, both sides. There's a buyer's affiliation, a buyer's affiliated disclosure and a seller's affiliated disclosure. That is extremely important that you get that signed. So keep that in mind. There's a little checklist in the middle there. And then call and email and ask us questions as much as possible. We are actually receiving a lot more phone calls and emails right now, and we're doing our very best to keep up to date with everybody. Just know we are returning calls as fast as we can, but we would rather you come to us and ask us questions ahead of time before you even write the document, rather than have trouble down the road. So just call and use us as a resource when you're in question about something.
Awesome. Yeah, they're very approachable. They're very helpful, and don't get frustrated. We just want to make things as comfortable for you as possible and protect you and your client. And don't forget that we're audited randomly by the Florida Real Estate Commission. And what they do when they come in is they pick 24 to 36 files out of our system randomly and just go, hey, what's up with this file? And we want to keep everybody safe, and your license is in hand. So thank you, Tanya. Always appreciate you. Appreciate it. Okay, so we're going to move forward to the meat of our meeting today, and we are really fortunate. We have Conan Raitt with us here today. Conan is a CPA accountant, all those different types of things. He's done my taxes for me for 8 or 9 years, I think now myself, and he works with a lot of our lead agents in all of the offices. He works with them. He works with Zena. He does a lot of our people. So he's very experienced in working with real estate agents, independent contractors. He works with agents, not just Keller Williams, agents across the whole Tampa Bay, around the state, a whole entire state marketplace. So I asked him to spend some time with us because, well, number one, we're mid-year, right? So mid-year to me means you still have time to get things right for 2021. And with COVID and all these different things that happened, some of us got a little haywire where that's concerned. And two, I also, I get a lot of questions on, LLCs and S corps and sole proprietors and this and that and everything else. And I'm always like, call Conan, because I don't even know how that stuff, what the best way to handle. I'm a broker for real estate. I'm not a finance guy, as Conan will tell you that himself. So Conan, I'm going to turn it over to you. I know you got some things to go over with them to make them aware, and then we've got a little bit of time left for Q&A, and off we go. And we appreciate you being with us today.
No problem. Thanks for having me. And I really, it's always great talking to Keller Williams agents. So a little background on me. I've been doing taxes for 30 plus years. I've done tens of thousands of tax returns for hundreds of realtors, as Howard mentioned earlier. And one of the things I like about working with Keller Williams realtors is that one of the things that Keller Williams starts talking to their realtors about from the very beginning is that what you're really doing besides real estate is you're running a small business, okay? So that's one of the really important things to understand. And I really like that about it. So these principles that we're going to talk about apply to any small business, whether or not you're a realtor or anybody else. So since we've got a lot of people on the call today at various levels of experience and production, I'm going to start at the beginning, try to cover a lot of ground, and then we're going to get more detailed and do a deeper dive on it as time permits. The reason I think it's important to start at the beginning is, one, if you're a new agent, it's important to understand why you might want to form a business entity and have it taxed a certain way. But if you already have one of these business entities, it's also important to understand maintenance of it. And because there's always some type of maintenance, whether it's filing tax returns or other things that you need to do in order to get the most benefit out of it. So first, let me just start off by saying as well, the IRS is really big on labels, okay? So what they call something is going to be very specific as to how it's taxed and how it's treated. One of the analogies that I use is, let's say that one of you were to come over to my house and you asked me for a Coke. All right, if I gave you a Pepsi, probably not a big deal. We've all accepted the fact that Coke is a generic term for a cola beverage. Now, if the IRS were to come over to my house and if they were to ask me for a Coke and I gave them a Pepsi, they would refuse it, get upset, demand that they get a Coke, and probably want a snack in addition to that because I didn't give them their Coke in the first place. So the reason I bring that up is that a lot of these terms that I'm going to talk about, they are not interchangeable, okay? So whether or not we're talking about estimated tax payments or other quarterly filings or any other thing, a lot of these terms are very specific. So let's get down right into it. So when I meet with a new client for the first time that's a business owner, the first thing that I'll ask him is, so why did you form this business entity and have it taxed as an S corporation? Because I'm just going to bottom line this. This is where we're going with all this. The predominant business entity that's used for most small businesses is the S corporation. So when I ask them that question, I'd say probably 90% of the time, people will say, I don't know, my accountant told me to do it. And that's not the way I like to operate. I think that business owners, as all of you are, as real estate agents, need to at least have a surface understanding of why these things are done. Because again, there's maintenance and there's other things that you have to do. And never let it be said that you just did something because Conan told you to do it. I want to give you enough information for you to be able to make this decision by yourself. Okay. So when we're talking about business entities, most realtors, we're just kind of cut the fat here and just get right down to the chase. Most realtors have an option of either forming a corporation or forming an LLC, okay? One thing that a lot of realtors are very confused on is that because you have a professional license in the state of Florida, you have to name that business entity very specifically and use certain terms. So because of your license, if you were to form a corporation, you would have to call it a PA. So a PA is the same as a corporation, okay? It's just that because of your license, you have to name it a certain way. If you were to form an LLC, you would have to call it a PLLC because of your license. So corporation is the same as a PA PLLC is the same as an LLC, okay? So that's the first bit a lot of realtors are very confused on. So then after that, we have this thing that's called an S corporation, right? It's important to note, you do not form an S corporation. You form either a corporation / PA, or you form either an LLC / PLLC, and then later elect to have that taxed as an S corporation. So you're only an S corporation for taxing purposes only. And all other purposes, you still remain either a PA / corporation or an LLC / PLLC. Okay, so let me just state that again. When you eventually elect to have your business entity taxed as an S corporation, you're an S corporation really as far as the IRS is concerned only, and nothing else really has to change. One other thing that is extremely important when you are a realtor and you hold that professional license is that if and when you form one of these business entities, you have to name it in a very specific way, okay? So if you were to pull out your real estate license is going to have your personal name on it if you haven't already done this process and I'm about to talk about. It's going to have your last name first, comma, and then your first name and perhaps your middle name. So your business entity has to be named your name as it appears on your real estate license, except you're going to put your first name first. So that's where it gets a little bit confusing. So let's just say, for the sake of argument, that we have a realtor that's named Bruce Wayne. That's the analogy that I like to use. On his real estate license, it's going to show Wayne, comma, Bruce. But when he's naming his company, he's going to want to call it Bruce Wayne, comma, and then you're either going to put PA if you form a corporation, or comma, PLLC if you form an LLC. Again, to cut right to the chase, I would say to form an LLC / PLLC, and here's why. It's going to give you the most flexibility when it comes to taxes, okay? So again, let's just cut to the chase. There's really not a whole lot of difference from a legal perspective. You can't really have partners because of your license or anything like that. So really, it's just going to be you as the sole owner / shareholder of the company. So I recommend any new realtor or existing realtor just go ahead and form an LLC. So again, in this case, it would be Bruce Wayne, comma, PLLC. So one of the things it's going to do, obviously, is it's going to give you some legal protection. Now, I'm not an attorney. I can't give legal advice, but it does provide a line in the sand between your personal assets and your business assets. So as Howard was mentioning earlier, you do have avenues that you can be sued by clients, et cetera. So at least you're getting some liability protection there, that when you form this business entity, they can only go after your business assets and not your personal assets. But really, the whole reason that we're doing this is really all about taxes. We're trying to save money on taxes. Okay, so after that, and here's the next most important crucial step, is that once you get your business entity formed and it's named correctly, you're going to get a federal ID number and open up a bank account. And then directly after that, you're going to change the name on your real estate license. That is super important, okay? There's a form, and I'm going to do a screen share here with everybody real quick so that we can see that. It is the DBPR RE10. Everybody can see this here on the screen. This is the form that you're going to have to file with the DBPR in order to change the name on your license. Why is this important? Okay, it's important because you have to get your commissions pointed at your company. Keller Williams will not pay your commissions directly to your company unless you've gone through this process of 1, forming the business entity, naming it appropriately, and then 2, changing the name on your real estate license to read the name of your business entity. Okay, that is super important. And you have to get those commissions pointed at your business, because if you're still earning the commissions personally or getting a 1099 personally, then all these tax advantages that we're going to talk about, they just don't exist because you're receiving that money personally, okay, as if you were a sole proprietorship. So now let's talk about that a little bit. So when Bruce Wayne first becomes a realtor, if he doesn't do any of what I talked about, he's going to get a 1099, and he's going to be treated as a subcontractor, and he's going to report his income and expenses as a sole proprietor on his personal income tax return, okay? So what does that look like? And what are we talking about as far as taxes being paid, okay? Again, I'm going to do a quick screen share here. Just allow me a second. So here's a copy of Bruce Wayne's tax return. And I'm going to make his net profit to be $100,000. And I found that if you're a Keller Williams real estate agent and if you're following the systems that they have in place, there is no reason why you can't net $100,000, perhaps in your first year or two. Okay, because I've seen a lot of new agents do it if they really apply themselves, apply the system, and move forward. I'm sorry, bear with me 1 second. My system requires a double authentication. Okay, sorry about that. Okay, so if Bruce Wayne is a single taxpayer and he has $100,000 in net income from his Schedule C, let's see how much tax he's going to pay. On that $100,000 in net, he's going to pay $24,093 in taxes. So let's let that sink in for a little bit. If you're a sole proprietor, you haven't formed one of these business entities, and you just report your income and expenses on a Schedule C as a sole proprietorship on your personal tax return, and your net is $100,000, you're going to pay the IRS $24,093, which is a lot of money. So how do we save money on this? What are we going to do to reduce this tax liability? So here's it in a nutshell. When you form either a PA or a PLLC and you elect to have it taxed as an S corporation, here's what happens. So this $24,093 in taxes right here is made up of two separate kinds of taxes. The first tax is income tax, and the next tax is what we call self-employment tax. So the income tax portion is $9,964. Okay, income tax, everybody pays it. It's kind of like your fee for living in America. Now, self-employment tax is Social Security and Medicare. So of this $24,093, $14,129 of that is self-employment taxes. So what happens when you convert to an S corporation is that you can essentially manage this $14,129. Because what happens is by virtue of our net income, if we change the label on it from profit from a sole proprietorship, okay, and we call it profit from an S corporation, we're going to save that $14,000 in self-employment taxes. Okay, so that's the whole reason for forming one of these business entities and then later electing to have it taxed as an S corporation, is we're trying to eliminate or manage this self-employment tax liability. And it really is as simple as changing the label essentially on that pile of money that you made from your hard work as a real estate agent. And the IRS says that you can pay less money in taxes. So now, why would I be really specific about forming an LLC/PLLC as opposed to a corporation? Well, here's why. I'm going to circle back to this point that LLCs are really flexible, okay? So let's say that you're not sure about all this and you're in your first year or two, or you need to have some more information about this because you haven't wrapped your head around it yet, and you're just not sure what you want to do, okay? So what the PLLC allows you to do that the corporation/PA doesn't is that LLCs are what the IRS calls a disregarded entity for tax purposes. And that's a really fancy way of just saying, you don't have to file a separate tax return. You don't have to do a bunch of administrative and other maintenance work to go along with it. So what happens is you form your PLLC, you do all the process that we talked about, and until you convert it to an S corporation, you just file as a sole proprietorship on your individual taxes the way that I just showed in my screen share. And so you do that until it becomes beneficial for you to be taxed as the S corporation. So we generally don't recommend that business owners, as you are, convert their business entities to an S corporation, again, for tax purposes only, until their net profit hits about $25,000 to $30,000. The reason for that is that, you know, up until you hit that point, the administrative costs and stuff, you might not be saving any money until your net profit hits 25 to 30,000. But you guys are Keller Williams agents. You're probably not running into that problem. But anyway, what that does though, is it preserves your choice. Okay. So if you don't have the business entity in place, you don't even have the choice of converting to the S corporation. It's not even an option for you. So again, if you don't have one of these business entities in place, I recommend that you go out and form it today. The reason for that is that they have a born on date, meaning that if you were to form your PLLC today, you really can't get any benefit from it for the income that you made from January 1st of this year all the way up until today. So to me, it's a low cost, low risk way of saying, okay, I at least want to have my option preserved of saving taxes later. So I generally don't like to have a sense of urgency with people and say, you need to do this today and have some kind of call to action like that. With these kind of matters, I think it puts stress on people. But in the issue of forming the business entity, I really do think that if you haven't done it yet, you should go out and form it today.
So Conan, based on that, so a couple things.
Sure.
One is because Tim Pulaski is asking about the charge for that. They would go to an attorney, obviously, to get this done. What kind of attorney does that kind of work?
Well, I'll say this, business law attorneys do that. We can actually do that as a service.
You can?
I'll be honest with you, for the cost that it takes, and because you're not having any other partners or anything like that, it's you as the sole owner, you really can do it yourself and it's cheaper. So I don't ever like to charge people for things that they don't necessarily have to pay other people to do. Now, granted, if you don't want to worry about getting all that right, meaning the naming of it, et cetera, we can do it for you. But a lot of business owners do handle this component of it themselves. If you go on to sunbiz.org, which is the state of Florida's website for the Florida Department of Corporations, you can do that there. And you can do it online. It doesn't take very long. You pay the fees, et cetera. And then you go on to irs.gov to get your federal ID number. And then you're all set and ready to open up your business bank account. But again, if you don't want to do that yourself, I'm happy to help you with that. And I would definitely consult a business law type of attorney if you're going to have them do it.
Got it. And then the other question, which is relative as well, is we have several agents that are on a team. So they're like, I'm Joe agent, but I'm on Susie agent's team.
Sure.
So I'm still getting paid. So they're asking, would that be just as beneficial for them? I'm guessing yes, because they're still running an individual little practice under the agent's team because they're getting separate commission, but I don't want to speak for you. What are your thoughts on that?
Well, let me say that this is an area that I get asked a lot of questions about. And from what my understanding is that when you have a realtor's license, you can't have any other ownership in your company. So even though you have these teams where you're organizing in name kind of, and everyone's kind of working together, the state of Florida doesn't allow you to have multiple owners in your business entities with these real estate licenses. Now, I don't specifically know why. I think the reason would be is that let's say that you did have a partner that was 50-50 that wasn't a licensed agent. Well, they could essentially participate in those commissions and not be a licensed agent. So I think that's why the state of Florida does that. So when you're a team, yes, all this is beneficial because you're still getting those commissions paid to you directly. So what I've seen is that even though people have these teams and their marketing and their branding and their websites is all focused on the team, all the agents underneath in the team, they all have their separate LLCs and they all have their own separate economies and they report their income and expenses accordingly.
Right. Got it. Perfect. So, Dina, you had asked about, remember he said that the Keller Williams can't pay to, like, here's the thing. When you make that change on DBPR, that's notifying the state that that's how you want your license to be. At that point, you need to make the MCA of your market center aware because the Keller Williams Market Center has to pay what your license name is in. So, for example, if it's Tamara Perez, PLLC or whatever that is, it's going to go to that. So say you do this on, July 1st, you will actually get two 1099s this year. One would have been January to June as Tamara Perez, and then one from July 1 to December 31 as Tamara Perez PLLC. But it's real important that you make the market center aware because we're supposed to be paying this the way you're registered with the state from, like Conan used the word born on date, from that date forward.
Right. Okay, so now if you've already got one of these business entities, hopefully you've gotten a little refresher in, okay, why did I do this? What's the tax savings involved? So now let's talk about the maintenance of it, because this is the crucial component once you do this. And this is where you're going to want to delegate this responsibility either to an accountant that you might have on your team or an assistant, or probably to somebody like myself. Okay, so so let me just back up a second. So audits are pretty rare. All right. I tell people you have probably a better chance of being struck by lightning than you do to get into an audit with the IRS. Now, being struck by lightning is really bad. You don't want to go through it, and it happens all the time, but not enough for people to typically worry about. But I will say this, if you don't maintain your S corporation properly, your chance of audit goes way up. Okay. Now, I'll also say that if you file your real estate business as a sole proprietorship, as a Schedule C on your personal tax return, by the IRS's own data, you are 10 times more likely to be audited by the IRS than if you have one of these business entities taxed as an S corporation. So my thought is that since you're getting all this reduced risk, you'd have to be almost crazy or neglectful not to do the maintenance component of it. Okay. But anyway, I'm going to do a screen share and I'm going to show you how this works and what's important about it. All right. So going back to our tax return here. So again, when we're talking about a Schedule C return, you've got this $100,000. As you see, it shows up on the 1040 business income from Schedule C. So again, let's rearrange the labels a little bit and we'll look at the tax impact of that. All right. So I'm going to make a couple adjustments here in my software, if you'll bear with me. All right. All right. So we've done everything that we need to do to have our business entity taxed as an S corporation. And let's take a look here. That $100,000 has moved from this line of business income Schedule C down to this line of profit from either rental real estate royalties, S corporations, etc. Okay. So all we did by changing label is we moved that income from one line of the tax return to the other. And then if we go to page 2 here, let's look at our tax. We're at $15,110. Hold on one second. So that's a far cry from the 24,000 that we were at. Okay. And there's a couple other things that'll happen here that'll adjust this a little bit. So now, how do we maintain this? What is the important part? Because we want to save this $9,000 in taxes at the very least, and it can be even higher. And I have to make a couple adjustments to the tax return. My apologies because of some other things. But so what does the maintenance component of this look like? Okay, so when you have an S corporation, you have to take out what's called an officer salary, okay? And this is one of the things when people talk about S corporations, it's talked about quite a bit. And what is that essentially? Well, by definition, as the shareholder of an S corporation, you are an employee of that corporation, okay? So when we're talking about officer salary, what we're talking about is that you have to eventually, when your profit reaches a certain point, you have to take out a payroll and treat yourself as an employee and issue yourself a W-2 at the end of the year. This is the component that I don't recommend anybody handle on their own. Payroll, if you haven't done it before, it's extremely complicated and you're filing multiple forms on a quarterly basis and on an annual basis, and it makes things really complicated. But the amount that you take out for this officer salary, this is where it gets extremely nebulous. All right, depending on what accountant you talk to, they're going to tell you different things. And I'll be honest, I am much more aggressive on this in favor of the client than I am in favor of the IRS. All right. So to me, if your net profit is under 40 grand, all right, there's no point in even taking out the salary. Okay. Because it's not worth it. And you're kind of diluting the impact of the S corporation. Then as that salary goes up, I would recommend different amounts. Okay. So going back to our example here, bear with me. What I would recommend on $100,000 in net profit would probably be in the neighborhood of I would say $25,000. So the way that that would look on your tax return, if you just bear with me one moment here. So essentially what we're doing then is we're splitting that $100,000 that we had, and we're putting $25,000 of it on this wages and salary line and $75,000 of it on this line for, oh, excuse me, on this line for profit from S corporations. Okay. So I know it's kind of a fire hose of information to hit you with, but that's essentially what we're doing, and that's why we're doing these things. But that maintenance component is really important, and I don't think enough accountants take the time to explain that to people when they say, oh, just form an S corporation, it'll save, or excuse me, form a business entity, have a tax as an S corporation, it'll save you money on your taxes. It's a deeper dive than that.
Brian Coward, I'm going to kill you. So Donna Suhaki's asking, is Fed ID number the same as FEIN number?
Yes, it is. Those are the same things.
Got it. Okay. Got about another minute with Conan. Does anybody else have any other quick questions? Like quick. Otherwise, what I'm going to suggest, Conan's with this great company called Bischoff. It's based right over in I guess that would be considered what, like New Tampa area? I don't even.
Yeah, it's off of Fletcher over by 275. So it's like moving into that. That's our HQ. A lot of us are still working at home, as you can see, due to COVID and whatnot.
And he makes it really easy for you. So what I would suggest, Tim's asking, what would be different? So how would it be different between an LLC versus an S Corp?
Well, again, what happens is if you have an LLC, you're always an LLC, but when you elect to have it taxed as an S corporation, you're essentially just changing the type of tax returns that you file. That's it. Okay. And that's why I think it's so confusing to people, because really for all other purposes, you're still an LLC/PLLC, except for the way that you interact with the IRS. That's what changes, and that's what allows you to be able to save money in taxes, essentially.
And then Margot's asking if their net income is under $100,000, should they still pay quarterly taxes?
All right, so let's talk about, just touch this briefly. What you're really talking about with quarterly taxes is estimated taxes. They're not due quarterly. The first payment's due April 15th, June 15th, September 15th, and January 15th, which is why I try to get people away from calling them quarterly. Again, back to labels, because if you think they're due quarterly, you're going to pay them late. And so what happens is the IRS wants you to pay your taxes essentially in full by the end of the year. They don't care if you do that with estimated tax payments, or if you're taking a salary out of your S corporation, you can have the income tax withheld there as if you were working for somebody else. I'm sure everyone's probably worked as a W-2 employee. They don't care however you mix it up. The main thing is to get those taxes paid in by the end of the year, so you're not charged a penalty on that.
So that's perfect. There's a pile more questions, but we don't have time for right now. So I just asked Janine, if you or Tam, or one of the two, if you could make sure that everyone that's on here gets Conan's contact info, if that's all right, Conan, they can contact directly.
By all means, that's great. I don't mind answering questions for realtors. I don't charge for the first few consultations. I want to make sure that you're on solid ground. If your clients have questions, especially about real estate transactions, I've handled thousands of them from the tax end of it. I'm more than happy to help that. I've helped real estate agents close deals around issues surrounding taxes, and there's a lot of them, and they can sometimes interrupt the process. I'm more than happy to help any way that I can.
Yeah, I appreciate it. I appreciate you spending time with us. And like I said, everybody, Conan, I'm sure everyone's got different solutions for your own taxes and whatnot, but I recommend him highly. We've had, like I said, Conan probably works with 30 or 40 of our, if not more, agents, including myself, with Keller Williams. So Conan, thank you so much. We're going to make sure that they all get your contact info. Like I said, if you guys can put that in the chat box before we finish today, that'd be great. Thank you so much, Conan, for spending.
No problem. Thanks for having me, everybody. I'm more than happy to help where I can.
Awesome. Thank you. Okay, just a couple more things before we let you go, because we've got a couple minutes left here. We've got some events we want to make sure you're aware of. We just have a couple minutes to go through this with you. We've got a great training on Monday the 21st from 1:30 to 3 on pricing strategies. Okay, and the registration information is on ubaldinitraining.com. So it's harder to price properties right now. It really is. Next, we have Gary Ubaldini. He does every month a mastermind program. It is on Friday, June 25th. He does focus, for Brevard County people, he focuses mainly on Hillsborough, Pasco, and Pinellas. That's only a portion of what he does. He honestly spends more of the time on strategy. Gary and Nikki obviously own the Tampa Bay market centers, and Gary, at his prime was listing 200 to 300 listings a year. So tons of incredible information for you in order to put into practice in your businesses right now. And he's right here at our fingertips. And then Jake Ancarelli, who's a mega agent in the Clearwater office, is going to be doing how he takes those projections and market data and uses that to gain more business. Jake is a $15, $17 million producer on our Clearwater Market Center. These are all resources for you that you're able to use for your businesses. So moving along, we have the Take Command program. This lineup is incredible on June 29th. Ryan Yarbrough, who's our regional tech coordinator, who happens to be based on our Clearwater Market Center, has a full lineup for you on the 29th. You don't have to, first of all, it's all on Zoom, right? And secondly, you don't have to go the whole entire day. You might want to pick and choose. But I mean, there is tons. I mean, Zach Younger, John Morris, Jordis, there's a ton of great information. It's all on lead generation. The entire day is on lead generation and building business. So if your business is not where you want it to be right now, or it is, and you want to just double it or triple it, you want to go to these because these are all proven methods for using things through Command and through our systems to be able to raise your business. Every person on here teaching has proven track record to make that happen. Next, we have new construction tours. We still have a very vibrant and thriving new construction program in our company. Marie and Deborah do a wonderful job with that. I know it's been tighter and tougher with the builders out there in the marketplace, just like we don't need realtors right now. However, we are in relationship with these builders that still remember they do need realtors right now. So understand what this is actual tours for you to be able to go to new construction locations and see them. And you get a little bit of a, where I tell you it's good is you're going to get a little bit of a head start on some of these communities, some of them even before they're actually open up to the general public. So Deborah and Marie do a lot of work to put these resources together for us. You're going to want to be a part of that, especially if you're working with buyers to have new constructions once. Your agent services people in your market center can give you even more details on this. And then our next town hall, great one in July, Dan Damad, who just joined Keller Williams last year. His business went from 10, I think it's up to 22 million. And he's an opportunity map guy. So not only did he double his business, more than double it, he's also the team leader of our Boynton Beach Market Center. He's going to spend the time with us next month. It's going to be extremely valuable for you. So great stuff coming up, great stuff happening. I mean, you are at the right place at Keller Williams, and we want to make sure you know that every time and each time you speak with us. We're always here for you to make your businesses better, stronger, more consistent, while keeping culture at the top of the game. You all have a great day. Thank you so much for spending the time with us. Happy day. Happy Thursday. Take care.